How's it going, guys? It's Ralph here from Beyond the Huddle. Welcome to this week's Bitcoin forecast. We're going to take you guys today through the SMI, the Smart Money Indicator, to see what the sentiment of the spot market is. Then we're going to take you guys through the COT to see what the asset managers have been up to this past week. And finally, we'll move on to the price action part, where we'll go over some indicators that we use here at Beyond the Huddle to see where prices could go next. So let's get started. Okay, guys, so getting started here with the SMI, that's the Smart Money Sentiment Indicator, where we get to see what the spot market, has been up to. They're accumulating or distributing. We can definitely see, as we spoke about last week right here, between the 9th and the 12th, that there was some heavy, you can see right here, called strong accumulation. There was a lot of strong accumulation going on during this, 41K range to about 42.5. That entire range had a lot of accumulation in the spot market. And what did we expect? The minute that we ended up going above the week level, then we would have expected prices to go higher right here, or some sort of reversal level. As you can see right here, then once we went up, we went about way too quickly, and the smart money started distributing onto the market, and that's kind of what these yellow ones here are showing. You can see right here, weak distribution and distribution. That right there led to a short-term, drop in price. And then the next time you wanted to make a decision was not when it turned green, because that's weak accumulation. You wanted to wait for the market to go back to strong accumulations. You can see this one purple bar right here led to a tiny rally. And then there was another 2 bars right here of strong accumulation. And that did end up leading to the rally, but that wasn't enough to make a brand new high. So you can see right here, swing high, swing low. That meant that distribution right here was strong enough to sell off right there. And then now we are, dropping, and we're starting to see a lot of strong accumulation. So I'm quite certain that if we're able to go back above our week level, which, by the way, the week level is like all the way up here. So, we'll go over that later and as part of the indicator section, the price action part of the video. So we'll have to see, but at the moment, as long as we're below that weekly level, I just can't make any decisions right now. But again, that'll be a conversation for later. But hopefully, this strong accumulation in the market can take us up to that level and beyond. Okay, so that's kind of what we're looking for, right? Now, in the short term, right here, you guys can see it pretty much confirms what the long-term players have been doing. So the short-term players, a lot of accumulation right here, strong accumulation, and then as it went up, you can start to see they start distributing positions right there. And then, you can see the bars here are much stronger, which makes sense that if you're going to have a pretty decent move, about $1,000 to $2,000, the shorter term players have to drive that move. So then they'll be more aggressive. And by the way, guys, if you want access to this Discord, there's a free trial going on right now. You guys can take, and we're actually going to come out with some other stuff quite soon. But feel free to go in the description of this video. There's going to be a link to this Discord that you guys can join and, join the community, the chat and stuff, and you guys can learn some cool stuff. So with that being said, let's move on to the COT, and then let's get started on that, see what the leverage players are doing in the COT, in the Commitment of Traders report. Okay, guys, so moving on to this Commitment of Traders report here on the CME contract for Bitcoin as of January 11th, we can see that the asset managers actually decreased their position in longs by 122 contracts to a total of 5,419, and they increased their shorts to a total of 968 by 68 contracts. Now, as I keep mentioning, I'm not worried about the decline of longs and the increase in shorts, because of the percentage that this is at right now. You see it's 84%. So we've actually gone from about 89 down to 84%, which can clearly be seen in a drop in price. Obviously, in order to go from 89 to 84, there had to have been an increase in shorts and potentially a drop in longs. But I actually want to switch it up a little bit today and go into the little bit of details as to why although I am long-term bullish because we're 84% long, as to how we could have seen this drop coming here, which I neglected to do because we used to look at each individual, the longs and the shorts. If you guys remember back like maybe like 6 weeks ago. We used to do that all the time. And then once this happened right here, so you can see that the net position is above the average. Usually if the net position is above the average, I don't tend to look at the longs and the shorts both individually. But after watching Misha's video yesterday, I do think there is merit to still looking at that every single week, not just when this turns bearish. So that's what, again, I'm still long. Obviously, we're above the 80% line, and this is still above the average. But you can definitely start to see, if I come here on our indicator, and if I click on the longs, you can see how, again, nothing's wrong here, but here's the kicker. If I were to turn it into the shorts, you can definitely start to see exactly where you would have expected to see a drop in price just by doing it this way. So you can see right here how the shorts went above average, and again, and so actually it's been even longer since I've stopped doing this. So it's been about 13 weeks, because this entire rally right here. So right around here we used to do this all the time, right? We used to look at the individual longs and the shorts. And I must have stopped doing it during this rally right here. But again, after watching Misha's video on the COT on the Ethereum, you guys should go watch that one. It made me realize that there is still some edge. Instead of just only waiting for the net position to go below its average to see who caused that, I should always just still keep paying attention to it. So I will try to do a good job at, a better job at that. But you can see right here that it made sense that back in, for the past 9 or 10 weeks, I've been saying the shorts have been increasing, but it didn't matter to me because the percentage long was still high. Although that is true, and that does still put me long-term bullish, this drop right here was definitely foreseeable. Had you looked at the individual shorts, you can see right here that as of October 25th, the shorts went above the average. That's definitely not something that you want to see, and you can see right here, it ended up going up for 3 more weeks. And then all of a sudden, the percentage longs started to level out, right? So once that happened, you can see the shorts kept increasing. And even right now, the shorts are above average, right? So there has to be a reason. And I've always maintained that idea, back since we started doing this in May and June, that there was a reason why, they have higher than average short exposure. And that definitely, we saw the drops coming because of our weekly levels. But we could have added this as well as a second confirmation of, oh, look, guys, every single week that we are below our weekly levels, be extra careful because the asset managers are also adding shorts above their usual average. Now, I've been comparing this right here. You see this right here this entire time. I've been comparing it to the August to January move that went up 500%. But actually, when you take a closer look, although it does look the same, and that's what fooled me, it looks the same on the long side. So we can come here and take a look at the longs. You see the percentage longs look the same. They look nice. And obviously, the longs are the same. If we go right here, they're above the average. Although I kind of struggled to do it there. But this one's just obviously, and that's what I'm waiting for, right? Look at this immense, humongous move above the average. And look at the positions. You went from about 500 all the way up to almost 6,000 in longs, okay? And in that entire time, price has done nothing but consolidate and actually drop. It's actually dropped about 40%. So, and again, we saw that coming because of our weekly level, which we'll go over in a little bit in the price action part of the video. But look at this right here. The biggest difference was this entire time, there was below average short exposure in this market, when right now we have above average short exposure. So you can see right now that what's keeping the asset managers saw this 40% decline coming, and they hedged their longs by adding shorts. You can see that right there. So back here, because they knew the market was going to go up parabolically, they had no need to hedge those shorts. So something very important that, again, I just didn't cover in one last time. The reason I didn't cover this was because I decided to not keep looking at the net position I decided not to look at each individual longs or shorts if we're above the average on a net position. If we fall below the average, then I was like, okay, who caused this, right? But really, I should have kept looking at when the shorts went above their average, since they increased it for so many weeks. But yeah, you guys can see now, again, it makes perfect sense. COT is all fine and well. And right now, I guess the only thing we're waiting for is just we're going to keep a close eye on the short position. We need it to have a sharp decline and then go back below the average. Once that happens, then we can start to call the low in this market and then go back. Again, the percentages is fine. We just need the shorts to start lessening. Like you see what happened here, they just fell out of bed. So right before the rally, you see they were above average, and then that was kind of like the precursor to telling you, hey, look, we're gonna dump, and then they did drop, and once prices drop, they decrease their short position with it. So I'm curious if that means that, for now, since we haven't seen a drop, that we will see a drop down to this level right here. We're already below our weekly levels, and we have been for a while. We've only been above our weekly level about 2 or 3 times during this entire 10, 12 week period. We've always been below our weekly level. So that's, again, very, very interesting stuff. But yeah, with that being said, I hope you guys like this breakdown of the COT. It's been a lot better than just the same old boring, oh, look, we're 80% long, we're bullish. I will have to start looking at each individual long and short now, because it does give you a lot more insight. So let's move on to the price action part, and let's talk about some indicators here. Yeah, just real quick, guys. I forgot to mention this, and just it's like a little tidbit here. Just remember back in May when we called this high, it was because they were net short the percentage, and you can see how the shorts increased here up until this drop in May. So let's zoom into that right there. You can see we were above average, above average, above average, and then when price action catches up, it's going to fall out of bed, and that drop was, that May drop was disgusting, about 56% drop. And now the same thing happened here. But again, the part that fooled me was that back then we were net short. That told me, okay, cool, everything's fine. I'm supposed to be positioned short. This time we're positioned net long. And that's why I didn't bother to look at this right here. And we've already fallen 42%. And again, you could have seen it coming because of the greater than average shorts, but I already explained that just now. But the key here is, if we're still net long, even after this increase of above average shorts, can you guys imagine when the price action catches up, when we get the bullish signals, whether we fall one more time to 35K or whether this is the low right here and then we go up, this rally that's going to come, I think it's going to be incredible. Right? Because if last time we were net short and it took this long and then we had this rally, right? I mean, we turned that long here, and then you can see right here, why was price able to go higher? Because we were, below the average in shorts. So again, keep a very close eye on this, guys. I'll keep you updated every single week, and that's enough of that. Let's go ahead and take a look at the price action. Okay, guys, so taking a look here at the price action, you guys are going to notice a new indicator on my chart, and that's actually our Beyond the Huddle volume profile. This is something that we actually love and use all the time, and we're releasing it to you guys very, very soon. And it's actually part of the current package, but there's been some wanting for just this indicator in our Bitcoin Weekly one, so we're going to accommodate, and we're going to have something in store for that. But let's start with the Bitcoin weekly level, and then we'll move on to the actual volume profile and why I think it's important right now and what levels I'm interested in. But basically, when the week started here, we were already below our weekly level, and this was updated straight to the Discord, the premium members on Sunday night. So they already would have known we were bearish. You can see right here what happened. We dropped right to the 42K level, our support level. But more importantly, the first target. So remember, you're already bearish. So this means that we expect this weekly candle to be bearish. So the minute that happens, your first target has to be this right here, which is our weekly value area. So then once you hit this, you have to be very attentive, because that could potentially be a potential reversal level, right? And, because the weekly level that we use to determine whether the candle is going to be bullish or bearish, or whether USDT prices will be bullish or bearish, is all the way up here. Essentially, you're not making any decisions, but this could have been, along with the SMI being bullish, this could have been the initial trigger to then cause prices to go up all the way over here. Now, we thought this rally right here, you see how it had crossed back above this right here, was going to be the key defining moment to then start us to get a push up here, but then look at this right here, it went right below it. So then essentially right now the problem is that the longer we spend below this, so the way that we think about these value areas is that anytime price accepts above or below the value area, that is very thin liquidity. So what that means is that then if we can stay below this level, we're going to have some, pretty aggressive and parabolic prices downwards. Okay, so the longer we stay below this level, and the level is about $42,000, which is funny because I guess now you know why I had the 42,000 level. I don't know why my 42K level is all down there. It should be up here, but congrats, now you know. Oops, I added too many zeros. Wouldn't you guys love it to be 420,000? But there you go. See, so that was why it was our $42,000 level was that. So let me just delete it. Now you know what the line is for. But essentially, the longer we stay below that, that means that prices, if you think about the market, it's bids and asks. It's going to be very, very thin, and then we would expect parabolic prices lower. Now, because you guys understand this idea now, and I can assure you that happened back here. So we had, it's funny because we had 48,000. You see 48,000 right here. That's exactly why. So we were using our value area low right here. It hit the value area low, it went straight down, and because it couldn't go back above it, prices ended up dropping, 16, 17%. And the same thing, but a different time frame of our value area was right here. As soon as we broke that, that was the big drop right here. And we did talk about this in our premium Discord, because that's where we decided to release this indicator for. So if we know that now that whenever we go below our weekly value areas, and there's many different time frames for these, and you guys will see that once we release the video and stuff. But if that's the case and that's how it works, then does that mean that when we add this plus the shorts being above average right here, right? Because they haven't gone below the average yet, like they did back then in in August. You see right here, they went below the average, and then that's what allowed it to go up when we were already net long. So right now we're net long, yeah, but we're above average in the shorts. So does that mean that that's what's going to cause us to go and hit, 37K, 38K, and then finally our 35K level? That could very well be. So again, for those of you guys that want to keep track of what the prices are doing and want to short-term trade, the longer that you use this as resistance, that's a no trade zone right there. And then I wouldn't be bullish until we cross back above the weekly level, and then you have the weekly value area high right there. Again, remember that thin liquidity is found here, thin liquidity is found here. So I would be very, very careful if you guys want to be a buyer right now, because there is, again, the longer we spend down here, the more dangerous it gets. But there you have it, guys. Again, we're going to start using these volume profiles. We are 100% on board with them, and we've been using them for a long, long time now. And now we feel like it's good to share it with you guys. There's a lot of edge in this, and if you guys are liking what you see, make sure you guys check it out on Discord. And again, soon we'll have a package just with the weekly level and the volume profile. But for now, it includes everything, all our concepts and all this stuff too, all these indicators. So with that being said, I hope you found some value in this today. I think that I'm really glad that Misha made that video on the Ethereum, and it made me think about, like, oh shit, maybe I should be looking at the longs and shorts again, not just when the net position goes below the average. So I'm happy about that. It helps explain this drop a lot better. Again, although we saw it coming, with these levels that I kept drawing out every week, even if you guys didn't know what it was, and with these weekly levels. So if you found the value in this, give us a thumbs up. Make sure to like and subscribe. Give us a comment. Tell us what we could do better. We always want to improve for you guys. And I'll talk to you guys soon. Peace.